Good evening. Ira Epstein, and here we are with your financial market wrap-up. And this wrap-up is for Thursday, and we're at the 4th of September, 2025, and the time about 5:40 p.m. Central Time. So tomorrow's D-Day. All right, like the old war that they were talking. Let's go take a look. Before I get there, summer is winding down, and today, the last 4 hours, you got about 4.5, 5 hours left at midnight Central Time. By the time you see the video and all, 4.5, 5 hours left. If you want to take advantage of 1/3 off any of my research, 1/3 off my main charting course. This was $600 recently. It's down to $168. The Bollinger Band and the Outside Day courses, they really feature what I teach in this, and then they really take you to the next level. But you can just go to these if you feel you know enough about charting. But 1/3 off, and come midnight Central Time, game over. It'll all switch back to my regular pricing. So I hope you do take advantage of it. Now let's take a look at the next thing. Not just the prices, but I'd like to get to the next chart. And there we are. The August non-farm payrolls, the big event, and I mean it's a huge event. This is not a small report. This is a granddaddy report. Economists are forecasting farm payrolls of about 75,000. Now remember, we had those huge revisions that went on in the last report. As you know, the BLS director got fired over it, blah, blah, blah. So now that they're looking for 75,000 compared to 73, and how this number comes out, believe me, I don't know that they've changed a darn thing as to how they're doing their surveys. What bothers me is why aren't all these surveys just done online? The old days, I remember the postcards, how you'd send them out and do all that. This is something that a farmer can do off his app, his iPhone, his Android, his computers. Let him do it that way and be done with it. He'll get it done then. And I'm not talking just farmers. I'm talking everybody out there that's in payrolls. I don't know why I said that. The August jobless rate's expected to go up 1/10 to 4.3%. They're looking for average hourly earnings to go up 0.3 month over month. And then we had today the items that I think fit right into the box for the Fed to cut rates. The Challenger Gray August unemployment employer plan cuts, they went up rather smartly. They went up to nearly 86,000 from last month, 62,000. The private sector jobs net change, only 54,000, there, versus 75. You lost a huge amount, 25,000 there. Jobless claims went up 8,000 in the lead number. They were only looking for the market to be down. You heard me, down 1,000, and now it's up 8. So you've got the weakness showing up there. Now the question is this going to be enough for the Fed to say they've got the weakness in the market? Here we go. Do I think that PPI and CPI are important? No. They're already to the point where they're willing to let inflation run a bit. And they're thinking that it'll run for a few months and that'll be the end of it. They'll deal with that later. I think tomorrow's a key day for this. And off that key day, you got to ask yourself, what will the markets do? We've had a stock market that's been rallying. Is it built it into it, or is it going to go further from there? Traders think that if the figure is just like it comes out and they go for the cut, that this has a ways to go to the upside. It'll be interesting because one of the worst trading months of the year, worst gainer month for stock indices, is traditionally September. We'll see. In the metal markets, same story. If you're going to let inflation run, why do you want to be bearish gold? Why do you want to be bearish silver? I would think they're going to go higher. On the energy markets, on Sunday, OPEC Plus meets. Now, some of the delegates have said that OPEC is really considering increasing production again. I don't personally see it, but who knows? The market rallied. It's suddenly giving up some of that. Bonds and notes, well, obviously, the obvious thing is if interest rates are going to start being cut, where do you go? The 10-year note today came down to 4.16%. It's the first time we've been on a settlement that I recall recently under 4.24 actually. So that's a good number. I was reading today, I think it was Bloomberg, and they had an interesting article. No, I think it was the Wall Street Journal. That if the Fed really wanted to cut mortgage rates and help the president, All they got to do is, instead of letting the mortgages run off the sheet, reinvest. In other words, go out there, keep buying back. And what happens when they do that? Because they're a willing buyer, they don't have to chase the market, and you get yields to probably slip on that. We'll see, because Trump is trying to prod everything. You saw today Lisa Cook, subpoenas going out by the Department of Justice. This does not mean she's guilty of anything. This is fact gathering. Some people are saying there's already been grand juries. I don't know. I haven't seen any fact to prove that. And if there were, they still have to come out. What did they do? Did they say, do these things? Is there enough evidence to try her? That's what the jury does. We'll see how this all works out. Let's go to the charts, because it's so interesting. If you finished here, you're at an all-time high in the market right now. Next up, the market, as you could see, at a crucial number on this chart. You've been here, you've done that. Is this going to become a launching pad? That's what every analyst is asking themselves tonight. If so, we've gone sideways basically for the month of August, then we're ready to break out to the upside. When you come to the swing line, which attaches a line to every day, I wrote this many years ago, you don't have a pattern that's telling you anything. You have a higher high, and you have a low that took out a prior low. That's not a trend. Next, the market's been fighting a battle at the 18-day average most of the month. Yes, you got above it, then you came back down and fought literally at it, but you've been able to stay above it. So the bias, without question, is to the upside, and the resistance is at the upper Bollinger Band, which comes in at 65.37.5 roughly. I laugh because each time you've hit that, you've gotten thrown back. Is that what's going to happen? Are we setting up for disappointment? I don't know. When we take a look next at the market momentum, you're overbought. So, overbought market, void of a trend, but the bias up, maybe it goes to the upper Bollinger Band or higher. There's no magic to the band. You can get over it, but you don't stay over it or under it more than 5% of the time. That's crucial. And when you go look at how often this gets hit, it's interesting. You have the same pattern at work, except you're not overbought in the NASDAQ, void of a trend, fighting a battle here. And the difference here, and I know this sounds crazy, is for half the month the market spent breaking, not able to stay over the 18-day average. It's the flip-flop of what the S&P has done. In the Dow, you've been unable since mid-month, actually since after the first week or so of August, and you've stayed up right into September over the 18-day average, keeping the bias up, but you haven't been able to travel to new highs, and you're overbought in the market. The Russell, to me, is one of the stronger markets right now. It did something today that was very surprising, but it happens. If you come with me right here, you lost the bullish embedded reading on Wednesday. As my work teaches, that ends the uptrend, unless the day after it's lost, it re-embeds. Today it re-embeds. Both numbers back over the 81 level. You've re-embedded the market. If you re-embed the market until the market loses that reading or takes out this low, the goal is to get back to the upper Bollinger Band, and we'll see if the market's able to do that. You're overbought as well. I'm telling you, this is not the easy, this is going to go one way or the other. When we come to the DAX, we talked the past 48 hours that the market gapped down, went into the Bollinger Band, 100-day average, and that with an oversold condition might be where the market might want to make a fight for a bottom. It's doing that, but it's certainly not in an uptrend, and it's not saying that. When we come to the 10-year note, are we embedding? You cannot count tonight because we don't know how tomorrow's going to finish. We can certainly come to Thursday, though. Both numbers were over 80. They were both over 80. Did I do this right? Hold on. Wednesday. They were not both over on Wednesday, 80. So you have an overbought market into the upper Bollinger Band, not embedded. I think there's professional money coming and taking some money off the table. Taking money off the table is not going short. Taking money off the table is rewarding yourself for taking a risk in the marketplace. I didn't say you took it all off the table. That's up to you. I teach certain things with it, and I'm not going over that here. You're trying to embed in the 2-year. You've stayed over the 18-day average, a pretty good story there too. Now, will the dollar go up or down on a rate cut? What do you think? You got to answer it, because that's going to be the importance. Do you normally go up when you cut interest rates, or do you normally go down in a currency when you cut rates? I can tell you the norm at the beginning of rate cutting cycles is typically down, and then there's a midpoint and then the turn, because eventually those cuts spur on business and they're not as bearish anymore and the markets take off in certain areas. Think of what they were doing in the Eurozone, and now you see their markets are at new highs on these levels. You got what I'm saying? It's very important to understand that. So normally I would be looking for that to be the case. We'll see what it does with the dollar. And the euro has got the market trying to figure out the same thing. They flip-flop each other. Which way? You're caught in the sideways action. The British pound has been trying to come down here. It's got its own problems with Miss Reeves. Is she going to be able to, as chancellor, get anything done, stay in it? Monday, there's going to be a confidence vote, by the way, taking place in France. Are they going to lose the government? Then what happens? Macron has to make many decisions, because I think there's like a 99.99 chance you're going to see the end of the government come Monday, as they have it right now. Could he put some coalition together? I don't know. I think the last thing Macron wants to do is call an election. Higher high, lower low, fighting a battle. But notice the market suddenly finding it easy to stay under the 18-day average into the Bollinger Band. In Bitcoin, you've come down to the 100-day average. You're finding support, trying to find, it might be the best word. The trend is definitely down. You're oversold. All I can say is you're down to areas of support, not necessarily a turnaround. You have to get through Wednesday's high in order to tell this market, that might have been it, and the market's ready to rally and maybe go back into the, let's call it 114, 115,000 zone. Not there yet. When we look at the energies, I'll let you try to figure out what OPEC does or doesn't do, because I can't figure it out. There's void of a trend in both WTI and Brent. Gasoline is still in an uptrend, but very overbought. Natural gas, I thought you'd have resistance at the upper Bollinger Band. You are getting it. You're overbought. I think the pros rewarded themselves, and I think they do this. Bye-bye, Miss American Pie. The money's been made. Let's take something off the table and see what goes on. That's where I think you're at in that. Where we're at also, and I want to remind you one last time, take advantage of the sale, IraEpstein.com. There's going to be icons up there at the top here. You can click to get back to the website if that's how you do it. I will catch you in the other videos tonight. I will catch you tomorrow when I do a full review of what this jobs data is going to look like. You have a good day.